Stock Analysis, and today we'll be looking at First Solar. Yeah, they are a solar company. They're one of the larger ones, and as far as I know and hope, they are one of the better performers in the industry. So, we are going to look through the financials today, a couple other things as well. And if you are interested, make sure to subscribe and watch the video, I suppose. Yeah, let's get into it. So, getting into First Solar. Oh boy. Okay, so I don't know what these mean, but basically they manufacture modules for solar. Yeah. Moving on to something I can know, market cap is at 16 billion. So again, on the larger side, I would say at least of solar companies, or at least the ones that I have seen recently. Target price at 256. Long-term growth rate is at 17%. Now this number is very interesting because if we look at the price right now, 141 is far below that. Although if we look at the mini chart here, that is also where they used to be near to their all-time high. And I am just spilling over my own words here. So if we look, they have been dropping fairly aggressively over the past few weeks, which is not great. However, at least in my opinion, I think the solar industry is kind of due for a bit of a comeback. I know a lot of people think that the current US political situation is very hostile towards solar, but honestly, I don't really see anything specifically getting cut. It's more like other things will be focused on more. So, like, I still feel like solar is a very solid industry to get into. It's more about, like, will it be the priority or not, which at the moment it isn't, but we'll have to see. So looking at the chart, falling off fairly significantly. They actually had their all-time high right before the Great Recession, and since then they have been a lot lower. So I think they're due for another one, hopefully. And let's continue getting into it here. So growth summary looks okay. Some of the long-term numbers are a bit on the lower side, especially sales, but I would still say they look okay. That's about all I have for that. Let's go into the financials now and see what's going on. So let's see here. Okay, sales growth looks very solid. You can see they did take a COVID hit, and also it looks like their sales were used to be a lot higher than they are, or not anymore, but they used to have sales of well over 3 billion consistently, and they dropped below that for a few years, and now they are back up. Now they are significantly above their all-time high, which is great. If we look at some of the other metrics here, operating income very much at an all-time high. Let me just check here. Yes, it is. And operating and net income drastically at an all-time high, which is awesome. So they are beating their former sales numbers and also exploding past the profitability numbers as well, which is great. EPS is kind of crazy here, or am I seeing things, or is the EPS kind of crazy? This would put the PE ratio at very low, which let's head back here and just check what the PE ratio is right now. PE of 14 projected to be 7.5. That is interesting. That is very low, especially in today's market. Also, $4.2 billion in sales for a 16 billion market cap company is also kind of crazy. And this is making me start to see some interesting things here for the company. So basic shares are increasing slightly. I would say, considering they only went up by about 1 million in the past 5 years or so, that's no big deal at all. Moving on to the balance sheet, and still seeing that PE ratio, that is shocking. First off, and seeing also that their sales have been growing a lot recently, that is again shocking. Total assets are increasing greatly, and that is not because of increases in cash, which is also awesome. A lot of times when we see companies increasing their assets a lot, most of the growth is just from cash, which essentially means not much. I mean, it shows potential that they can invest into things, but there isn't anything like physical growing. But for them, a ton of property, plant, and equipment investments are happening right now, which is fantastic. That's exactly what we want to see, especially for a company like this that manufactures for the solar industry. That's awesome. Very little debt, especially compared to their cash. Now, don't get me wrong, they do have just about 700-ish million, but they have 1.8 billion in cash. So no big deal there. And let's move on. again, I'm feeling optimistic about the company. It looks pretty good, pretty good. Um, Moving on, cash flows look good. Operating cash flow is not at an all-time high, which is a little concerning, but also the way the sales are growing, the way the net income is growing, I think it's okay for now. Hopefully, we see that go higher in the next couple quarters. Investing cash flows look okay. They have been pretty mixed actually with their investments. They were going through a couple years of selling off investments. Now it's a bit more mixed. Financing activities, they have been issuing debt consistently for 4 years, but again, their debt situation is absolutely no concern right now. It slowed down a lot in 2024 as well, which is awesome. And free cash flow consistently negative. However, what I'm going to say here is that considering how much their sales are growing, I think they are perfectly fine. Would like to see them be free cash flow positive very soon, at least. But just the way things are looking, I think it is very promising. Moving on, one last thing, ratios. Let's see what has changed over the years here. And honestly, I'm expecting positives. So gross margin, well above 5-year average, and everything that we can see as far back as we can. Same thing with operating margin, same thing with net margin. ROA, ROE both look very good. If we scroll down here, their debt to equity is minimal. So I'm just gonna keep saying it looks very promising. Another thing I like is that with all of these improving metrics, the stock is down. Now, it is going to be interesting going through this earnings report, which it looks like came out just about 2 days ago, and we are down a significant amount from that. So let's get into that now and see what we're dealing with here. So I'm hoping it's nothing too crazy, but at the end of the day, even if it is, I think from what we've been seeing, it won't be that bad. So which one of these do I click on? I'm going to go with this one. And we do have a street takeaways as well, which is pretty cool. We'll look at that in a moment. So this is the rundown of their report. Net sales of 4.2 billion, 1.5 for the fourth quarter, which is pretty solid. I would say they clearly had an uptick in their quarterly revenue for their last quarter, which is pretty good. We're not seeing any year over year comparisons though, but sales guidance of 5.3 to 5.8 billion, significant increase from last year. EPS diluted of $17 to $20 a share, which is amazing if they can pull that off. Cash balance guidance, so they're expecting to burn through a lot of their cash, or at least some of their cash, considering they're projected to go possibly down to 0.7 from their current net cash balance of 1.2. No big deal there. Let's read through this a little bit. 2024 continued building foundations for long-term growth strategy. Even as we maintained a selective approach to bookings, we expanded manufacturing capacity, new facility, and progressed construction of another new facility, established the infrastructure we anticipate will accelerate growth with a new center in Ohio as well for R&D, and produced and shipped a historic volume of modules. So, fantastic. I would say everything here looks great. Do they show how many gigawatts they've sold total in 2024? It doesn't look like it. 2024 net bookings of 4.4 India domestic volume. 4.4 compared to 18 to 20 for 2025. I don't know if this metric and this metric are the same, but that would be a pretty big increase if they are. But again, I'm not too sure. Other than that, I would say that's about all we're going to get from this. Let's look at street takeaways. So shares are trading up 10% after this report, which is interesting because 2025 guidance below consensus. So it looked like the report was received fairly negatively. But if we look, it looks like they popped up significantly the day after, and now they are down significantly. So going through it, company is ramping up U.S. manufacturing, which we did just see. Near-term headwinds remain. Discussion focused on warranty concerns, which could remain until clarity is achieved, but it seemed better than had previously thought. They filed a lawsuit, whatever. Management noted guidance includes 1.4. Other than that, I would say mixed. Let's see what the analysts say. Target remains, lowers target, Just to be clear, though, these targets are being lowered from prices that are way above where we currently are. So at the very least, wow, target was at 360. This analyst has a target of 304, which is basically a doubling, which is still crazy. Based on everything I'm seeing, short-term outlook is negative. We could be seeing them based on the fact that this kind of support area right here is being smashed, which let's just draw this out here a little bit. This seems to be a solid support area for them, and they are almost entirely through that. If it does go lower, I would expect it to be right around the $100 range. But if we do see that, I would say this is a very strong buy, or at least it seems like it would be at a very incredible value. Right now, I would say the value looks really solid as well. The PE ratio is insane, and that is what we will get into now. So let's go into the valuation part here and see what their competitors are looking like. This is one of the lowest PEs I've seen, and the only competitors they have available right now have PEs that are a billion times higher than theirs currently. Let's try to find something else. So for some reason, they are in the semiconductor industry, which I don't really understand, but they are a solar company. Um, Nothing crazy for the numbers, though, unfortunately. Let's try electrical equipment. This wouldn't be the closest thing, but at the very least, there are a lot more things available here, including Generac, which is a company I just heard of a couple days ago. So PEs here, and again, this is for electrical equipment and power systems. So not their direct sector, I would say, although a related sector. But if we just put in the numbers here, even with this sector, 31.85, 25.82, let's put it in here. So FSLR, I always forget the ticker for this company for some reason, and I forgot the numbers. 31.85, 25.82. Let's get that in here, 25.82. And that gives a pretty crazy valuation. Is that the right EPS? Yes, it is. So PE ratio of 11.75, upside of 145%. That is insane. And this is compared to a very large amount of competitors too. Are these all directly related to them? Not as much as I would have liked, but the fact that there are this many slightly related companies that have a valuation that is so much higher than First Solar, I'm going to say that this looks like it is in an incredible position. Very similar to Red Cat, which I just reviewed yesterday, or not yesterday, like an hour ago. I don't know why I said that. Very, very similar situation where this just seems like an excellent value that is at right now. Definitely going to be looking into this one for myself, but that is all I have for today. Make sure you do some more research on the company if you're making any investment decisions. I am not a registered investment professional by any means. But yeah, that's all I got for today. Thank you so much for watching. Hope you enjoyed. Make sure to subscribe if you haven't, and I will see everybody in the next video.